All right, everyone. So we've learned about expenses last time. We figured out glass rental, advertising, and rent were expenses. That's different. That's different from the cost of units per glass. What made up cost of units per glass? What made that up were the lemon, sugar, and water that went into the production. So the expenses are separate from that and come out later. Okay, so we need to record the expenses of the glass rental, advertising, and rent into our balance sheet. We pay our expenses out of cash. So we are taking $5 out of cash. So this will be $23. And now are we in balance? We're at $25 here. Total owner's liability is at $30. What will bring down, we need to be in balance here. So what did we do wrong? In order to make both sides equal, you need to take $5 off the right side. Where do you take it? At notes payable? No, you need to take it off of owner's investment. So we're going to add a part here. We're actually going to, we did something wrong last time. We're going to change this back to $15 and we're going to add earnings week to date. Earnings week to date. So that's where we would have had the extra $15, right? Oops, we have $5. Okay, so what we didn't do last time is we didn't add this earnings week to date. We're doing that now. So we had $15 earnings, but we just realized there's more expense, right? So we have to take it out of this. So that would make this $10, and now we balance. So earnings to date were reduced by expenses. Even after the gross profit, there's a further decrease. Now my side's equal. My cash is dropping. We're at $23 cash. But I still have enough to pay off mom and dad. I decide to do it in order to just pay them off and have notes payable taken care of. So I find $10 and I pay them back. What does that do? It reduces my cash to $13, but it reduces notes payable to 0. Am I in balance? Yes, I am. My owner's equity or earnings has risen, right? Okay, now does the left side equal the right? Yes, my cash is dropping, but I paid off the IOU. I give a card to my parents with the $10 in it. Thank you for the loan. I love you. So you would go to your bank and pay off your bank loan, right? So they read it. They're proud of him. He's paid off the IOU. IOU literally means I owe you money. Okay, now we balance. Let's look at the purpose of the balance sheet. The left side is things and stuff that I have in my business. The right side is people that I owe and what the owners have. Let's look at it now. These are the things and stuff I have in the business. Here's the people I owe, and this is about the owners, right? This is what you are really interested in. Thus, the purpose of the balance sheet is to connect things to people. It shows you the things you have in your business, then it connects the things you have to the people who own it or the people that claim money from it. These are the people that claim money from the business. These are the people that own the business. Okay, now how many balance sheets did I fill out? A lot, because I was doing a lot of transactions. Would I normally fill out the balance sheet every time I do a transaction? No. The balance sheet is really a financial statement, but we're just starting the business out, right? So we're just learning to do this. How often a balance sheet is filled out varies from business to business. Banks, since they handle a great deal of money, do it on a daily basis because cash is going in and out. Some other businesses do it weekly, some monthly, some quarterly. What does quarterly mean? Quarterly means that you would do it every 3 months because there's 3 3-month periods in every year. So since I'm planning to continue selling lemonade through the summer, I'll use every week as my time to do this accounting period. So I'll only fill out this balance sheet every week. So let's look back at the balance sheet. What happened this week at the lemonade stand that isn't recorded? Does the balance sheet show what your sales were for the week? No. Does it show me cost of goods sold? No. I had to put those separately, right? Here's my cost of units. Here's my expenses. It doesn't show me any of that, right? Did I sell some of my product? I sure did. Does the balance sheet show what went in and out of inventory? Nope. Does it tell me how much I paid for my expenses? No. Does it tell me my earnings? No, it doesn't. It only shows me a snapshot of the business. So what do I need in order to get those things? Well, I need to start another scorecard, a different type of scorecard. We learned that a balance sheet shows us a moment of time, like a snapshot, but we need a second scorecard that gives us a record of events happening over a period of time, not just a snapshot. Events like buying inventory, making your product, selling it, incurring expenses like the glass rental. They're happening over time. What type of camera records a period of time? A video camera or a movie, right? So we need a financial scorecard that acts like a motion picture. It will cover a period of time and shows that motion in and out. It has a beginning and an end like a movie or video. Luckily, the second type of scorecard exists, and it goes by a couple names: operating statement, income statement, profit and loss statement. So we're going to add that to our what are the operating statement, income statement, profit. I'm going to go P&L statement, profit and loss. Okay, so we know these are all the same. All of these terms represent the same type of financial statement, but for our purposes, let's go with income statement. That's what we're going to call it, right? That's our main one that we're going to use, income statement. All of these terms represent some type of financial statement. We're going to call it an income statement. So this has been a lot. You've learned a lot. We've learned all of this vocabulary. We haven't gotten into LIFO and FIFO. There's other things to get into. We created a balance sheet, and here, earnings week to date, I would probably move that at some point into, no, I would keep that in owner's equity. It's all in owner's equity here. So we've learned all this, and we've realized the limits of what the balance sheet can do. We know we need another statement. Very, very useful. All right, so that's chapter 1. I look forward to seeing you again. I'd like to ask you for a favor. I'm doing this for free. If you like and subscribe and hit the bell icon, that will help others to see my videos. See that as a way of giving something back to me. Another is tell one friend about our video series here, and go to RJK English and have a conversation with me. Let's talk about this. What are your goals for a business? Is this what you want to learn? Do you want to learn something different? Are you looking to learn more from people actually doing the work? Give me some ideas. So I'll see you later.